Stock tip. Best stock setups.
Welcome to today's daily update with me, TWTR. As you can see, the markets continue their downtrend today, and the bears are still in control. We still haven't reached our target, 426.36 in the SPY, and that's why, especially by finishing still beneath the 200 mark, we are still well underway on our downtrend. You can see it better on the intraday chart. This is the 50-minute chart intraday, so this is the point where I managed to go short here in the indexes, so in the range of 439, 440, with a stop at 442. This was in the SPY, and also in the NASDAQ, pretty much the same move, and in the IVM looked a little bit more powerful here, so the IVM offered me a better opportunity here, I think here somewhere, so here somewhere with a stop at 204, so the IVM I'm more secured here, and this chart looks a bit better than all of the rest. I will make it look a bit more visible. So this is how we finished the day. We finished the day with a small bull flag here. Also in the other markets, in the NASDAQ and in the SPY. I hoped for a breakdown beneath this bull flag, but it still didn't come. But nonetheless, I think I may have accidentally activated my stops here, my stop sells in all three of them, so my position on the short side is a bit bigger than I wish to. So I had my initial position here somewhere, and then I programmed a stop sell in all three of them, and it got activated. No biggie. I think their stop loss would be about here somewhere, so not that big of a problem, but it might just turn to one if we get a small bounce in the direction of the 50 intraday or the 200 intraday. I hope not, but if we do, I still believe we are on a descending trend, and I may just be willing to delete my stops for a short time, only to activate them. So my stop losses, only to activate them later. But we shall see how the market performs tomorrow. So I still think we're on a negative today. So this is another powerful distribution day. We haven't finished with that much decisiveness as we did the day before, but the journey is bound to continue, at least so I think. The euro to US dollar also seems to confirm this trend. So you see here we've broken below the lines again, and we are still just above the support line. But if I really look at this, I know this was a trend canal, and this was a nice trend canal here, but now we've broken above this support line once and twice, so it doesn't really look like a support line anymore. So I think we can lose it. I think the trend canal is broken, so I don't think it has any power anymore. So this would be the actual setup here, or the actual formation here, and we continue to move down. So it may be that we are bound to hit 111 again. That's not something that is unpleasant for me. In the contrary, because all of our portfolios are in US dollar at the moment. Mine, at least, because I started a new hedge there, but I'm sure yours also. Then the German markets also heading south again and testing the 30 again. They are bound to test the 30 again. Then let's see how the oil is doing. The oil is still hovering just below this major trend line here, just below. I'm curious if the oil is going to be able to break above, or if it bounces back down again. I'm very curious what's going to happen at the moment, especially with the war hanging above our heads here in the Ukraine and Russia. If the war is bound to break out, then it just may be that this is the push oil needed yet now that this couple of years, I think 2 years in the developing now. Then gold, if you remember, gold broke out on Friday, and I think this breakout finally got a confirmation now. Also, the weekly looks pretty healthy here. So it's finally a nice setup in gold, a nice breakout in gold that one is able to trade, but only here in the weekly. The stop would be here, and I think it would be a safe place to pull your stop below the breakout candle. The silver did manage to break out on Friday and is just hovering above this trend line today. So it remains to be seen if this is a valid breakout. It doesn't look like that from the look of it. From the looks of it, you have a very low volume, very low. So definitely below average volume. I think a third or a fourth, a quarter of what you get normally. So it looks pretty weak. And now that I think about it, yes, I was curious how the gold is looking. So gold also didn't have that much volume. So I'm pretty curious if you're going to get another gap down tomorrow, as we are used to. But on the other side, I forget that this is only the weekly chart. Sorry. No, the volume is pretty good. The volume was pretty good. So in the weekly chart, we've just had Monday behind us. So the volume is pretty good. Okay. Now for the developments of the next day, what are our strategies? So I've told you the last time around, the strategy was to wait for a bounce in the direction of the 50. The bounce didn't quite come, but seeing how we've touched this line at least and hovered here a little, I decided to go short, and perhaps it would have been wiser to wait for another day. Well, it doesn't matter anymore, because what's done is done. The strategy would remain to consolidate our position when we reach the 50, but not just when we reach the 50, but when we reach the 50 and turn down again, then it would be a nice point to consolidate our position and enlarge our positions here. So that's the strategy I'm going with. And other than that, the same strategy applies to the NASDAQ and to the IVM. I think of all of them, this chart is most convincing in the IVM this time around, and not in the NASDAQ or the SPY. In regards to swing trading and to any other trading at the moment, I am not that interested. As you know, most of our setups are now destroyed from this move. Apple still has some hope here left, but if the markets continue down, then Apple is also gone. But the major ones, so AMD looking terrible, Amazon looking terrible. So another day like this, and then down you go to 2,700. What more do we have? Twitter, not looking very healthy. Not looking very healthy at all. Then Netflix also continues this trend down here. This is a classical downtrend. And do you have another title? I think Facebook. So Facebook also trend down and continues down. So for the moment, I don't think there's any place for swing trading, and unless we conquer the 458 in the SPY again, then the strategy for the time being will remain, I think, cash or short in the indexes if you get a good setup. but no swings on the long side, at least for the time being. So when the markets turn above this support, above this resistance line here for 158, then it would be the time to go. But until then, we still have some I think we still have some days in front of us. You can also see the moving averages are all pointing down, including the 50. So I think this is what's in front of us. This is what awaits us. And if you take a look at, if you make a move, an average move here, then the target would be somewhere in the range of 400. So hopefully we get it. Hopefully we get it, especially now that I'm also short. So hopefully we get it, and after that, hopefully we turn around and we can finally begin the year like we wanted to. So we are still waiting for that nice rally that didn't come. Okay, that's all for today. Thanks for joining me, and see you again tomorrow, guys.